Hello traders, this is Rich from Tradesight. Here's the market preview for the coming session. This is going to be for Thursday, May 29th, 2014. Had a pretty nasty distribution day today when all was said and done, where the market couldn't really get up and go. We had some grinding against the previous high in the Nasdaq side, but the Nasdaq side was really pretty weak internally all day. We closed minus 600 issues on Nasdaq, while we closed positive by a small amount on the ES side. But without further ado, let's take a look at the major futures contracts just in pure price action, which we haven't done in a little while, which is always good to look at. All right, here's a look at the ES futures. Here's a look at the current design. We have this essentially what is a breakaway gap from the previous session, and today we have this little narrow range doji day where we actually closed below the day's open. So that is a negative, but also could be a little bit of a measuring move. The other thing to keep in mind here when anytime you're evaluating price is when you're looking at a candle. This candle looks fairly small, the one from the previous session, but don't forget to include the gap. When you do include the gap, it's actually a fairly large candle, and that was from the leftover from the holiday. So here's the beginning of the week, first candle. Include the range all the way down to the previous settlement, and it's actually a pretty decent sized candle up. So I think today was really more of a measuring day than anything else. Though the only problem is that the volume was up today versus the up day from the Tuesday session. But a little bit of a measuring day today. We did hold basically in the top half of the trading range if you consider the gap from the holiday. So really need to see the bulls really get up and go here and get this to the top side. But I don't think it's really surprising that we did have a measuring day today because of the price action that was unfolding on the Nasdaq side. All right, so here's a look at the Nasdaq side, the NQ side. You can see that added a trend line here. The trend line essentially is the previous high close of the move. So the previous high close of the move was tested today, but you can see that we've got a lot of expansion to the upside here. So we really need a little bit of a measuring day to kind of mark this off. So it shouldn't be surprising that today's a measuring day and that the Nasdaq side couldn't get through. I would have been pretty surprised if the Nasdaq side did punch through on the first try. May need to handle off here a little bit and kind of go lateral, making this into a cup and handle. That's very possible. So definitely figure that into the mix going forward. So we could see some back and forth against this level, which would be perfectly fine and certainly very understandable after pivoting from about 3,600 all the way up to 3,720 or so to take a shot at the previous high close. But nonetheless, this is also a distribution day where the market failed to get through a key level, so it could also morph itself into a little bit of a counter trend move that could always certainly be something more important to the downside if it continues. So definitely be on top of this and make sure you're on top of this critical level on the Nasdaq side. Really need the Nasdaq side to break through here and cut loose to really give the broad market side, the ES or the YM, a little room to run. All right, here's a look at the multi-sector daily chart. The XAU still feeling the effects of this rollover. This has really been pretty good and been pretty dramatic. It's starting to accelerate to the downside. There's actually not that much more room before we start to interact with the previous low on that. BKX did nothing today. The oil services were also a laggard, but the leader has been and continues to be the transports, which is definitely healthy at this point. So the bulls should be happy to see that head up, but a little bit concerned that the oil services, the OSX, was so weak today. All right, so here's a look at the individual sectors ranked from best to worst. XAL top gun by a pretty good margin. The transports did have good relative strength. The utilities were very strong. There's a lot of money flowing into the interest-bearing assets today, and we certainly saw evidence of that in the bond market as well. Bottom of the list, as we talked about before, is XAU, which was really weak. The drugs lagged, and the broker-dealers were fairly weak. Don't want to see them start to really underperform the market too much. That would be a negative. Oil services was a disappointment, being down half of a percent on the day. Would like to see them do a little bit better at this point in the move. All right, so here's a look at the bonds. The fixed asset class was definitely attracting money. So this is in the midst of a rally. We're actually starting to accelerate here a little bit. If we do continue higher again tomorrow, we're really going to see some acceleration. You can take a look at the CCI here. The CCI has made a new high on the year here, which is really starting to push up and get pretty aggressive. The area that we're in right now, we exceeded the +1 ace level. Next big level is going to be the +2 ace level at about 115.5 for the bonds, and if we exceed that on a closing basis, we're going to wind up with a frame shift. So this is really starting to pick up energy to the upside. MACD still really isn't too overbought, just because we have this pretty good organization here to the upside with two-way trade here, making higher highs and lower lows along the way. So that keeps that MACD from getting a little bit too frothy. Oil, on the other hand, really kind of grappling with what is starting to turn into, and I hate to say it, a triple top, because triple tops are extremely rare and usually just a breakout point. But for now, here's one touch, here's two, and here's three where the market's having trouble. Big down day, settled back down at the 6 ace level, interacting with the 10 EMA. So really negative day, the biggest down day that we've had of this whole move for sure. So definitely figure that the movement in the dollar is contributing to this, and could continue to do so with more dollar strength. I want to talk about gold futures here. Gold futures did make a new low and broke down again. This 1250 area is going to be key support, and there's going to be more support just below that at about 1245. The 1245 area is going to be the risk level from the seeker. Here's your 1 and your 13 exhaustion warning. Not a great signal just because it's so flat here. There's very little extension between the 1 candle and the 13. So usually all this does is really kind of mark the end of an impulse. So we could definitely see the 0 ace level or that risk line come into play before we start to see the effect of this exhaustion warning right now in the gold futures. Since we're just talking about the gold futures, let's take a look at the XAU. The XAU is working on 9 bars down. We're at 8 bars now, so we're kind of getting close to an area where we could see some support. This -2 ace level was really used very well at the end of last year and the beginning of this year, so definitely be on guard for that. That's a really key area that I would expect the market is going to remember. And remember, 9 days down usually gives you an opportunity here for a bounce and a reversal back to the upside. So make sure you take a look at the video that we did for the scans of the individual sectors and stocks, and that showed that there was a lot of downward action and a lot of volume in the mining shares that compose the XAU, but there weren't a lot of downside signals. So this could be getting washed out a little bit here, at least on a short-term basis. The broker dealers, XBD was kind of weak today on a relative basis. Couldn't get up above the 50-period moving average. Got up into that relative area, but didn't break through. So for now, still really unable to get to intermediate positive, but it still remains short-term positive in this key sector. The semiconductors are still holding above this 8 ace level and still kind of grappling just below this static trend line, which is going to be really important. So this +1 ace level at 601 is going to be really important. We're already 7 days up, so 8 or 9, we're going to look for some selling to come in, or a little bit of a lack of follow-through, just because we're getting so deep into the count on the startup phase, and also that we're going to be getting pretty close to the +2 ace level here, which is a pretty strong resistance level on the Murray math box. So definitely be ready for that. Transportation index was up about 0.75% today. Keep in mind this 8 ace level at 81.25 is going to be really strong. Remember the 0 ace, the 4 ace, and the 8 ace levels on the Murray math box are very potent. So 5 days up, so we've got room to certainly hit the 8 ace level, maybe even exceed it by a bit. But we are getting a little bit deep into this count, and we're starting to get some pretty good extension to the upside here. Finally, let's take a look at oil services. Oil services are still kind of really not getting it done. Still held below the 50-period moving average. So if we clear 289 on a closing basis, that'd be a new high close on this move, and really could set up for a move up to this 8 ace level and the static trend line. That's the green line right here. So we do have a positive MACD cross here, but we don't have that upward momentum where we've broken back above the 0 line. So I'll be ready for that. And we're still pretty early in the bar count, so we got 4 or 5 bars to play with here. So we definitely could get up here pretty good into the 2 ace level if they can do so. If not, this 4 ace level is going to come into play, and then probably the 200 period moving average, and then we're going to set up a third lower high, which would definitely be a negative. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.